All right, so listen, man. The bearish mitigation block is the last down closed candle before the impulse move down. So listen, put your cursor on the top of the highest high. Put your cursor on the highest high.
Yes, I know, you know.
Put your cursor on the highest high.
This high,
Where's the highest high at?
this high is the highest high.
Highest high. That's right there. The highest high is put your high on the highest high right there. The red candle, right?
Yeah,
So look now, go to the right slowly. Now, where's the lowest down closed candle before? Do you know where the impulse is? Do you know what the impulse is?
yeah, I know where the impulse is.
Do you know what a or ICT call a what does he call it? Does he call it an impulse or he call it a? Damn, I'm having a brain fart right now. So basically, the mitigation block, it's a M. Do you understand what it's a downward sloped M? Put on a line chart. Click on a line chart. Okay, so now put your cursor on the highest high. Okay, now go to the right and show me where do you see a downward sloped M. Go to the right slowly. Where is the downward sloped M? Meaning that the M is stretched all the way down. Where do you see an M at? Where do you see it at? A downward sloped M.
This M,
No, go back to it. Go back to where you see go back to the high and then go slowly to the right and tell me where you see the first downward sloped M. Where
I
it's like
see
the M is pulled down, like somebody trying to pull, like you see a straight M and then a fat
this
person literally got on the M and just pulled it
this
down and it stretched down.
this one here.
Okay, and where's the next one at?
This should be the next one. Yeah,
Hold on, go to the first one.
this one.
Okay, so where's the low before the huge break? Where's the low before the huge break? I'm trying to show you what a mitigation block is, bearish mitigation block, ICT.
This low.
Okay, so where's the next one at?
This low.
Okay, go back to the first one. Now go slowly to the right. Where's the next down close candle before the huge impulse? You just showed me one that is one, but where's the next one at? Go slowly to the right and think about what I'm saying. Where's the next down close candle? Where
Okay.
is the line chart? Where's the next down close candle before the huge impulse? Where is it?
This one.
Thank you. So go ahead and turn back on the candles. Okay, so this is how it works. The bearish mitigation block is the last down close candle before the huge impulse. So where do you see a huge impulse at from? Where do you see the huge impulse at? Because remember, listen, the bearish mitigation block, the way it works is when you have a huge impulse, it has to separate itself from all of the candles. Because the one that you just showed me, the first one, that is a bearish mitigation block. But if you look at it with the candles, the impulse did not separate us from the consolidation. You see the consolidation at the top? Where's the
Yeah,
consolidation at? Go ahead and draw a box around it. You use the measuring tool and show me what the consolidation is. Show me what a high is and where's the consolidation at. Just draw a box around the consolidation that you see. Where's consolidation at?
this is the consolidation.
Okay. So where's the huge impulse that separated itself from that consolidation? Where's the impulse at?
This
Okay,
this
then.
base.
Exactly. This is what I'm trying to tell you. You got to remember this. Because if you turn on the line chart and you like, okay, well, he said it's an M. This is exactly how ICT teaches it. I'm not saying anything that he wouldn't say. He said in his video literally that it's an M. It's a downward sloped M. But what I'm trying to tell you is that you have to use the line chart, but you still got to turn on the candles because the first one that you pointed out is a bearish mitigation block. But you're looking at it right now, it didn't separate itself from the candles. You see that?
That's true.
So what I'm trying to tell you is that this is a clean bearish mitigation block. And if I was actually marking this up, I would go down to maybe the 1 hour chart because the candle you about to mark up to me is a little bit too thick. I would probably want to go on a lower time frame, but go ahead and mark up with a red box. Go ahead and mark up that mitigation block. So what's the mitigation block?
It's the last down close candle before the impulse.
The lowest down closed candle. It's not the last down. It's the lowest body closed candle. You see what I'm saying?
Okay.
Because a lot of times when you see this stuff, you're going to see multiple down closed candles in a row. So you literally have to zoom in and see whichever one is the lowest. This shit is very, 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 very accurate. There's no ambiguity with this shit whatsoever. So you have to, even if the lowest down closed candle is one pip below, you have to use the lowest down closed candle because when price come back up, it's going to respect that one. And the powerful thing about this is if price don't come back up to hit that mitigation block, that just show you how bearish it is. So go ahead and mark up the last down closed candle before the impulse, or what ICT called displacement, the displacement candle. You got to mark up the whole candle. When you mark up that mitigation block, you have to mark up the whole candle. So the high to the low. And then we're going to label it bearish mitigation block 4-hour chart. And with the mitigation blocks, I don't like the label. I don't like the color the deep red. I like the color like a light shaded red, because the order blocks, they the ones that deserve the deep red and the deep green because they're a little more powerful. So let's label that like a light red. Yeah, like right there or something like that. Yeah, and then lighten it up a little bit. Well, let me see how it looks right now. How light is it? Take off the yeah, you're gonna have to lighten that up. That's way too dark to me because you just want to see the candles because we don't use indicators and all that. Yeah, about right there. Because I literally was on a guy's live today, and I think he claims to be a millionaire. I guess he is a millionaire, but he had like all this stuff on his chart, like the book map and the VWAP and the indicators. I'm just like, I mean, if you're making money, that's cool, but I'm just so grateful I didn't go that route. You know what I'm saying? Like I know what the fuck is really going on here.
Yeah.
And but if you don't understand ICT's concept, you're gonna believe in book map and the VWAP and the I know how to use moving averages. I tried to use it for a little bit, but what I'm saying is I'm just glad that, so yeah, you can leave it like that and just drag it all the way to the right. I'm about to show you something. Drag it all the way to the right. Oh no, you gotta label it. So label it bearish mitigation. So just put negative MIT. So just put negative MIT and then put negative MIT. Yeah. 4-hour chart. So then space 4H and then label it green because on 4-hour we use green. Like I said, you can change the colors however you want in the feature, but we're just trying to make it real simple. Now drag it all the way to zoom out or scale out. Don't scale out and drag it all the way to the right. I'm about to show you something. I'm about to fuck your head up.
That's
Drag it all the way to the right. You're going to have to scale out so we can see the whole chart and then drag it all the way to the right. Now, the mitigation block is already something phenomenal, but what I'm about to show you after this, I mean, maybe I shouldn't be showing you this, but I mean, I can always take the video down, so it's fine. But I mean, it's really that powerful because there's really no guessing, and you're about to see that for yourself. So go ahead and drag the box and scale all the way out. I mean, drag that box all the way to the right.
this box.
Yeah, you got to drag it all the way to the right. And we're going to have to put that font on a 10 because it's on a 14. And we're going to have to put it all the way to the right. So drag it all the way to the right, and then you got to change the font, and then make sure the text alignment is the bottom right so we can see it.
To the right.
Yeah, just double click on it. Yeah, and double click on the box. Oh, it is a 10. Okay, and then it's on the bottom right. Okay, cool. I don't know why it look a little bigger. Okay, so keep dragging it all the way to the right because I'm about to show you how powerful these blocks are. You got to scale out and drag it to the right all the way to where price is now. Yeah, so you got to move up a little bit so we can see. Yeah. Yeah, so just drag it out like a little bit further than where price is now. Maybe Yeah, maybe like to next Friday, not this Friday, but next Friday, something like that. Yeah, or like right there. Cool. Okay, so now we got to keep marking it up. So this is how you. This is see when I saw this for myself, man. I was on cloud nine. Like in November last year, I was like I got this shit down. I remember being so pumped up because I actually knew how. Because I remember waking up seeing myself in profit, but I was always scared. Like, okay, well, how do I know when it's going to reverse? Like I just didn't know. But
Yeah.
with the mitigation blocks, it tell you exactly what the hell is going on. So now we need to find the next bearish mitigation block. So can you scale it to the right so we can see the so we can see the wicks because we don't see any wicks, we just see the bodies. Okay, so now go back. Yeah, so remember the bearish mitigation block is the last down close candle before the impulse push down. Remember, it has to leave a consolidation, man. Get your get your measuring tool and show me the next consolidation after that big push down. Now remember in your head, you got to visualize that. Remember, to the right of these candles, we don't see anything. It's nothing but black space. So even though you see those red candles right there, you have to, and I'll show you how to do this. Just mark up the next consolidation after that impulse or displacement candle. Where's the next consolidation? And mark it up from the high to the low.
That's the next consolidation. Small.
Okay. So where's the last down close candle before that? Where's the impulse at? This is perfect. Where's the impulse at?
Impulse.
I mean, where's the impulse or displacement candle at? Where is it? Remember, it's the last down close candle before.
This is going to be the last down close candle.
Okay, so go ahead and clone that box at the top and drag it over. Hold on, are you sure? Hold on, are you sure? Is that the last down close candle before? Okay.
Yes.
Yeah, go ahead and drag it. Go ahead and clone that box at the top and drag it over. Now with this one, you're gonna have to zoom in a little bit. Actually, hold on. That box that you have at the top is not on the last down close candle. Drag it over one. See that box? Drag it over one. Because remember, you don't have it on the last down close candle. You have it to the left of the last. Just put it on there perfectly if you don't mind. I just like for the stuff to be perfect because none of this stuff is random. It look random, but it's not. Just drag it over one to the last down close candle right there. Yeah, right there. Yeah, right there. So yeah, you're gonna have to get a mouse, man. You know, it's gonna make stuff a lot easier. So go ahead and clone that box. Go ahead and clone that box, and then we'll drag. We have to drag one down. Okay, now drag it down to the last down close candle. I'm about to show you something that's going to be a little confusing. Listen, man, you're going to have to put this exactly at the wick high and exactly at the wick low. So you're going to have to get your measuring tool. Like I said, you don't have a mouse, so it's very difficult for you not to navigate without a mouse. But you're just going to have to use, the computer screen or whatever. But the mouse will be a lot easier. But I need you to zoom in all the way down to the low and all the way down to the high of that candle. Try to get it as perfect as possible. You don't have to zoom in necessarily. You can use the scales to the right and scale all the way up and make it look like pencils and just drag it all the way to the right because it's yeah, so just drag it down to the high. Just drag it down to the high. Yeah, you can eyeball it a little bit. Yeah. Okay, now drag it over and put it on the last down close candle. Okay, now put on the last down close candle. Now click out so I can see because you got the circles in the way. Okay, so now listen. With the bearish mitigation blocks, you're gonna have to play around with the time frames. You're gonna have to play around with the time frames on all of this stuff. Because to be honest with you, actually, we're about to go to the daily in a little bit. I need you to go to the top of that candle and put it exactly on the candle if you don't mind. So get the magnifying glass and zoom in and try to put it exactly on the top of that candle. I'm about to show you something. So I'm about to show you ICT mitigation block. You listen, when you zoom in, yeah. So try to see off it is. That's where you really got to zoom in. Okay, now now scale back out. Don't use the magnifying glass. Scale back out so we don't you lose our place. Because if you use the magnifying glass, it's going to zoom you too far out. So just scale out if you don't mind. I'm about to show you something. You have to play around with these time frames, man. You cannot just get on a 4-hour chart and be like, okay, well, whatever I'm seeing is the clear picture is not the clear picture. So, okay, listen. When these bearish mitigation blocks is powerful because the way it works is if price is truly bullish, guess what? It's not supposed to close above that mitigation block.
Yeah.
Okay. Now, in this situation, it did close above the mitigation block, right?
Yeah, it did.
But what I'm about to tell you is the way it works is it can close above the one you just saw, but to be truthful, it needs to close above the one above that. If it closes above the one above that, especially even if it's on a lower time frame, the trend has definitely changed.
Okay.
Now, to be honest with you, I don't want to see it close even above the one we just drew up. But based on my back testing, sometimes it will close above the bearish mitigation block, the one that we're on, and then we have to start looking at the next one. If it takes the next one, it's a wrap. But usually it won't get up to the next one. But a lot of times it won't even close above the one we just marked up. But now we need to go to the daily. We need to go to the daily and see what's going on because you're about to see on the daily. Really, you have the free version of TradingView, but really I would like to go to like the 8-hour chart or the 16-hour chart. But since you have the free version, we got to work with what we got to work with. So go to the daily, type in 1 day, and we're about to see how this mitigation block looks on the daily chart. You have to play around with the time frames because I promise you on the 8-hour chart, which is a double candle variation of where we're at right now, that candle would not have closed above. So you always have to play around with the time frames. Like, okay, well, it closed above on a 4-hour, but what did it do on a 5-hour or 6-hour? Okay, so you see when price came back up on the daily, it just wicked right there. See that long wick?
Yeah. It did not close.
Yeah. So go back to the 4-hour. Just type in 4H. So we really need to be looking at the 8-hour chart or 16-hour chart, but it's cool. So listen, if you don't have time or you don't feel like going to the higher time frame, then you're just gonna have to work with what I just said. Like price sometimes will close above the mitigation block that you're on right now, and you have to start looking at the next block above because sometimes it'll close above and start working its way up to the next mitigation block, and then it'll close. It'll do a bullish candle inside of that block right here. When you watch the replay, you'll see my cursor, because you can't see my mouse right now. So if price, sometimes it'll close like up here, and then it'll reverse hard. So if you're on a lower time frame and you're not too sure, if it closes above this one, to me, I'm actually gonna get out of the trade. But sometimes that hurt me in the past because price would actually come up here into this one and then not take the high right here. It has to take the high to really be bullish, but I really don't want to see it. I probably would have got out of the trade if it closed above like that because a lot of times if it closes above like it's doing right here, it's going to retrace down and then it's going to try to start make its way up. Okay, so but to be honest with you, even if you understand market structure, when you seen that next candle close, that should have told you right there everything. What's the next candle right after that green candle? What is that called?
Engulfing.
Engulfing. So that's an engulfing candle, or what ICT called displacement. So that's why I understand people don't want to understand this shit. I get it. It is a lot of moving parts. I mean, because I just told you about mitigation blocks. Now I just told you about candlestick analysis, which is a whole nother discipline in itself. I mean, but I put the fucking work in. So, that's just me. But anyway, so this candle right here would have told me everything. I wouldn't have to go to the 8-hour time frame or whatever. When I seen this displacement candle right here, this would have told me price is definitely trying to take out that low. I would have got in on a short. What I would have did was I would have got in right at the low. I would have got in right at the closing price of that, and I would have put that's an order block right there. So I would have thought price probably would want to come back up. So I would have put a pending order right there, right at the order block. And because sometimes you just got to get in when price is going down because a lot of times it won't come back to the order block sometimes. So I'll put like a low leverage position in like a 0.01 or something or 0.10. And then at that order block, I probably put 2 lots on. See? Because I know it's you have to understand the overall flow of the market too. But all right, so So where? Okay, so you just drew up a bearish mitigation block. So where's the consolidation at? Where's the next consolidation under that next impulse? So where's the impulse at? So you just drew up the mitigation block. Where's the impulse at? Right after that mitigation block.
This guy.
Okay, so go ahead and mark up the consolidation with the measuring tool. Where's the next consolidation point before the next impulse down? Mark it up with the measuring tool that disappears. You're not marking it up correctly. I know you don't. I know your mouse is tripping, but you got to literally put the consolidation on the right area, if you don't mind.
Okay.
Put it at the bottom. Yeah, put it at the low, and then draw it up to where all of the consolidation is before the next impulse. Just draw a box around the whole consolidation box before the next push down. Remember, you got to imagine it's a blank screen to the right. I know you see the candles now, but that's why the whole trading view replay thing is not good to have. So where's the consolidation at before the next impulse?
This.
Okay, so go ahead and clone the mitigation block and put the go ahead and clone the mitigation block and then put it on the next mitigation block according to what you just learned. So where is it? Where's the next mitigation block at? Bearish mitigation block. Where is it? A lot of times you can pull it over one. A lot of times you can drag it up and drag it down, where you can just eyeball it and put it exactly on the wicks. Now, like I said, when you're doing this in your own spare time, listen, dude, you cannot do it this way when you actually trade, man. You're gonna have to actually zoom in. I'm talking about your spare time.
Yeah.
You're literally gonna have to, because I'm telling you, it look like you can't. Okay. And whoever watching this, you can do whatever hell you want to, but with me, I'm going to zoom in all the way in and put it exactly at the height of that wick. Not a tick less, not a micro tick less. Because I've seen this stuff go. I've been on a 1 minute chart and think I'm seeing something and it be the wrong thing, and then it's like 5 pips away, and then I lose money because I'm waiting on price to come down to a certain point. So in your own spare time, remember, you got to zoom in and make sure it's exactly on the high of that wick and make sure it's exactly at the low of that wick. Okay, so so listen, look at what do you see? What do you see? What's happening right now? You got a bearish mitigation block that you see how price is coming up into this block and reversing.
Yeah, constantly.
Listen.
1, 2, 3.
Okay, listen. So listen. This is how we have a confluence. I'm about to show you something real quick. Where's the bearish breaker at? I know this call is about mitigation blocks, but they both intertwine with each other. Where's the bullish breaker at? Where is it?
The bullish breaker.
Where's the bullish breaker at? You don't even have to move the screen. I'm gonna help you out a little bit. You don't have to move the screen at all. Where's the bullish breaker at?
Bullish or bearish?
I'm sorry, bearish breaker.
Bearish.
I'm about to show you something. I'm about to show you what confluence trading is, and when we have 2 or 3 or more of the same things, it's showing you exactly what price you want to do. So where's the bearish breaker at? Hold on, let me check on my Bitcoin trade real quick. Show me where the bearish breaker at while I look at Bitcoin, because I'm currently in this trade. I put a lot of research in it. I'm not going to miss this move.
This is the bearish. It's still the same thing.
Okay, hold on right quick. Yeah, see, that's why it is funny because shit is crazy. Hold on right quick. Let me check on this Bitcoin, because it's actually about to make a push up based on what I'm seeing. Like Dreezy Banks said, you got to understand what you're seeing. Let me see something. I want to take a buy right now, but I think I'm being a little bitch when it comes to that. Yeah. All right. So listen, man. So now we got a confluence. That's to see what you need to do now is label that. Label it. Actually, let's change it a different color. Let's change it to. In a situation like this, I want to make that block a little more significant. So you could change it to like purple or yellow or something like that. Or you can change it to a red. Maybe you just change it to a deeper, darker red. Yeah, just change it to the deepest red you have. Yeah. Now go ahead and label it 4-hour bearish breaker and 4-hour bearish mitigation block. So put and, so you already have it, or you already had it on there. So you just put bearish breaker Yeah, you could put and just put and bearish breaker 4 hour. If you watch my last video where I made money on USD CAD this morning, I literally show you all the confluences that I had that showed me that where prices were going to reverse hard off of USD CAD.
USD card.
Yeah, like just watch my video if you feel like it when you get done, and you'll see how I made money off of that this morning. I mean,
I saw a notification about it.
yeah, I
Launched.
mean, same shit I'm showing you. Like, I mean, I'm about that life. So, all right, so bearish breaker 4 hour, and then you can just get out of here. Okay, so now this is showing us this. See, now you see when it's a confluence, you see how price is really respecting this area right here. When price comes back up into it, why? Because we have a bearish mitigation block, and
Yeah.
we have a bearish breaker. Now, why is this a bearish breaker? Why did you label? And can you put that bar exactly on that candle? I just don't like this stuff not to be perfect. If you don't mind, can you just drag it right on that candle because it's not on that candle perfectly? Yeah, if you could just drag it literally right on the candle. Yeah,
There's no way. It's too small. The candle is small. You
right
cannot.
there, right there. Just drag. I mean, all I'm saying is just make it perfect and drag it right on the candle. Okay. So why is this a bearish breaker right here? Why did you say this is a breaker?
Because the low that caused the lowest, the down close candle that caused this high has been taken by
Okay, so
this.
hold on. Put the cursor. How do you know that high was taken? Because they look equal to me. So put your cursor on there to show us that that high was actually taken right there.
This high was this week.
Okay, so this
This
is
high,
actually okay. And that, okay, I just want the people to see it in the future, even people that's watching this 2 years from now. Now,
yeah,
this is very valid because the wick took the high and it took the candle close high. You see that?
yeah,
Put your cursor on top of that bullish candle. See that? It closed above
yeah,
all candles to the left, and it closed above the wick high. This is extremely strong. I'm trying to show you something. This is extremely strong because sometimes you'll see the candle close above, close lower. So all I'm trying to say is that this is a very valid bearish mitigation, bearish breaker. Okay, so let's go ahead and scroll to the left, to the right. So what do you see happening right here? When price coming up into that bearish mitigation block mixed with the bearish breaker, what's happening?
it rejects
Okay, now
several
listen.
times.
Exactly. Now listen. What you got to do now is I want you to get the Fibonacci out, and we're gonna see all this stuff is algorithmic. So now once you get the Fibonacci out, we're gonna put it at the high of that box and the low of that box, and now we're gonna mark up consequent encroachment. I think ICT called it consequent encroachment, or you call it mean threshold. It really don't make a difference. But my thing is, when it comes to this and how powerful this man's teachings are, I want to say it exactly the way he said it. So even though consequent encroachment and mean threshold is the same exact thing, it's just 50% of an area. But me personally, I want to say it exactly the way ICT say it. So
Yeah,
the way I think he says it is, I think it's consequent encroachment, or maybe mean threshold. But the whole point is, 50% of this area is going to tell you everything. So I need you to try to put it exactly on the high and exactly on the low as much as you can.
and that's
Okay, now listen. Double click on the Fibonacci. I want to lighten those white lines up. It's a little too light, so I want to lighten it up a little bit. It's a little bit too dark. So go down to scroll down and let's try to lighten up those white lines a little bit, so we can kind of see the candles. Scroll down, scroll down, scroll down. You can put your two fingers on the mouse pad and just scroll down. It should automatically scroll down.
yeah. What level?
Okay, scroll down. Hold on. So where's the? Oh, go back up. Go back up. I'm sorry. I haven't used Fibonacci in a while. You don't need to start using it because it's powerful. Scroll up. So click on those white boxes right there. Click on the white boxes, and then just scale it down to maybe under the green. So just put it directly under the green square. Directly under the green square. The green square at the top. You see the green square? Just drag it right where it's up, right there, up under the green square, right there. Yeah, and just do
Okay.
that for the other three as well. I just want to lighten it up a little bit so we can see price a little bit better. So just drag it over to under the green square. Yeah, and just do it for the other one, and then. All right, cool. All right, so then click on OK. So now what I want to do is I want you to get a. Okay, hold on, right quick. my Bitcoin notification. Bitcoin, when it take off, boy, it takes off. Hold on, real quick. Yeah, I'm just gonna go ahead and get on this trade on demo. I don't trust it on my live account, but so I just want to see something real quick. Hold on, real quick. Let me take this trade. Hold on.
Okay.
Yeah, I should be taking it live. Just gonna take it on demo and just because I don't trust it 100%. Even though my back testing showing me that this, it's gonna happen the way I think. But this is a this is a psychology game. So I mean, but I actually would the truth is I actually want to I want to make a withdrawal before I actually take this trade because let's say I take a loss, I mean I lost all the money that I made this morning for nothing. So fuck that. I'm gonna go ahead and take a withdrawal, get some money out of it, and then I'm getting back in the trade. So because I fell for that in the past, you just feel like a damn idiot. So hold on quick. Let me take a trade on demo real quick. Hold on. Man, what's going on? Yeah, because I mean I don't think you know what I'm talking about. Like sometimes you'll take a trade on demo and it's kind of like the same satisfaction. I just want to know that my analysis works. You know what I'm saying? Like I don't necessarily have to be on a live account because once you really know how the shit work. Okay, I just took a trade on demo. Okay, so let me go back to your screen. All right, so okay, so look, you need to put a line on there in the middle, like a ray or a trend line, and drag it all the way to the right. And this is consequent encroachment. Now, that line right there, you could delete Fibonacci now. Now that line right there, let's label it. Let's label that line a dash line so we can know this consequent encroachment. And I need you to label the line consequent encroachment. Yeah, drag it all the way to the right. I'm about to show you something. Hold on, what do you see so far? Do you see any candles closing above that consequent encroachment or what?
No.
Exactly.
Okay.
It's showing you. I mean, that's why I'm saying, like the dude concepts. That's why people go crazy over his shit. They have a reason to. People no longer confused with this fucking game anymore because of him. I mean, put these goddamn Wall Street traders on their ass. And we supposed to be quote unquote retail traders and we know more shit than them. Because we know where the market going and we're not using all that goddamn education. Technology. We just using chart. So drag it all the way to the right. Oh, I forgot you don't have. Yeah, man, this is gonna be difficult, man. Did you order? Yeah, I mean, because you're gonna have to put that line directly in the middle, my man. So just try to do it as best as you can. Okay, so now we see it closed above there. You have to drag it out a little bit more. So use a scale, so scale to the right. Yeah. So and then just drag it to the right, and then we're gonna have to pull that line all the way to the right to where price is now, and maybe all the way to like next Friday or something. Yeah. So you got to just scale out a little bit to the right, or drag it to the right. Now, what I would have done if price closed above that candle, because remember it's not supposed to close above mean threshold. So, and I want you to just make that a dotted line, a dashed line, once you drag it all the way to the right. Yeah, just drag it all the way to the right. Yeah, and just try to eyeball it as much as you can and put it right in the middle, 50%. Yeah, just pull it up because it's not at 50%. Okay, yeah, let's leave it like that and just make it a dash line if you don't mind. Just make it a dash line. And the line is red. Is it red or?
Yeah, it's red.
Okay,
It's
cool.
red
Okay, cool. So listen, when price closed above that candle right there, like I said, when you watch the replay, you'll see where my cursor is. What I would have done, like I said, let's just assume you got the paid version. So I would have went to like the 8-hour chart, which is double this candles, and I would have seen if price closed above. See, if you start playing around with the time frames, man, you'll see how time frame correlation is everything. Because this was a fake out right here. It closed above mean threshold. I'm sorry, consequent encroachment. And shit, I would have been I would have been looking for price to go back down to an order block and then go higher. To be honest with you, if I didn't do time frame correlation. So where's the order? Where's the bullish order block here before? Where's the bullish order block at? The real bullish order block before price closed above that high right there. Let's just see if you how you doing from the last teachings. Don't go to high time frame. Just look at it. Where's the real? Listen, it's multiple bullish order blocks on this chart right here before the high. I'm asking you, where's the real bullish order block at? The
This
real,
one.
the bullish order. Where's the real bullish? Where's the high? Listen, go to where put your cursor where the candle closed above mean threshold.
So yeah,
Okay, so where's the real bullish order block? Now, there's multiple bullish order blocks on here, but where's the real bullish, the most relevant bullish order block at? Because what I would have been thinking is like, okay, if price closed above here, it's probably gonna go down to order block and go higher. Because remember, it's not supposed to close above mean threshold. But I promise you, if we went to the 6 hour chart, if we took a look at mean threshold, this would have been a wick. Does that make sense? It would have been a wick. It would not have shown that it closed above. Why? Because it went a lot lower. So where's the bullish order block at? Just to see if you freshening up on the studies of old. Where's the most valid bullish order block at? What is a bullish order block?
bullish order block.
What is it? What is a bullish order block?
The bullish order block is the last. Yeah, the up close candle. The last up
Oh,
close candle.
the bullish order block. What's a bullish order block?
Sorry. Uh, the last down close candle.
Okay, so where is the last down close candle before that candle closed above mean threshold?
Above mean threshold. Last down close candle. Somewhere here.
Okay, listen, that is a bullish order block, but where's the most relevant bullish order block? Because remember, that is a bullish order block, but where's the real one at? Where's the lowest of the lowest? You have to look at the lowest of the lowest, man. You just can't say price is going to come back down to last down close candle. Yeah, it might do that, but you have to
This one.
identify the real. Thank you. That's the real bullish order block. I mean, that's actually not it, but because remember, you got like 2 or 3 other red candles coming down before we got to that candle right there. But all I'm saying is I would have been looking for price to reverse to come down into maybe one of these last 3 down close red candles before reversed. So anyway, we're not here to talk about bullish order block. I was just testing your teaching, your from before. Okay, so now let's still mark up another bearish mitigation block. So go ahead and clone the bearish mitigation block at the top. Go ahead and clone it. Not that one because that one is mixed with a breaker. Go ahead and clone that one. We're gonna clone it and then we're gonna find the next one. So drag it down after you clone it. Okay, so now we're looking for a displacement candle that made us leave consolidation. Actually, you know what? Sometimes you won't have a big displacement candle like we just saw, but you still have a valid bearish mitigation block. So go ahead and find the. You have to find the lowest down close candle and mark it up before price close above that high up there before it close above mean threshold. Find the lowest down close candle, and that's the bearish mitigation block. So you still can find them in consolidation. It's just a little more difficult because you're not always going to have a displacement candle that takes you away from consolidation down. So go ahead and find the last down close candle before price close above that high, before close above consequent encroachment. Where is it?
This man.
Where is the last down close candle before price close above consequent encroachment of that 4 hour and bearish breaker and the bearish mitigation block? Where's the last down close candle? That is a down close candle, but that's not the last down close candle, is it?
No.
Okay, so find the bearish mitigation block. It's the last down close candle before we had that huge high, up there that closed above mean threshold, consequent encroachment.
This guy.
Okay, mark it up. So you just drag it all the way to the left. Just drag it all the way to the left and then put it on the bodies, the high and the low as much as you can, and then just drag it over one. That's probably the easiest way to do it. Okay, so zoom out, scale out. Okay, yeah, scale out and go back. Okay, so now let's take a look. Now scroll to the right. Now what is price doing now? Look at this, man. Do you see what I'm trying to explain to you?
Yeah, yeah, see
Oh, man, hold on,
clearly.
hold on, hold on, hold on. We gotta pause. We gotta pause, man. Come on, man. Look at the power of this shit. You just marked up the last down close candle. It literally came back up there twice. This is an area where you could sell from. If you understood that EU was, what is this, EU? Yeah, if you understood that EU was bearish, when you mark up the bearish mitigation block like you just did, you literally see price leaving it, coming back to it. You're supposed to have sell limits inside of this block, especially, but you have to know the overall time frame. That's why I have a problem with people starting on a 1 hour chart. I'm like, the fuck you doing? You have
Yeah,
to know the over. See, if you go, if because it shows you that price has to go down on a long time frame, 3 month chart, 6 month chart. It shows you that the price has to come back down or come back up to a bullish uh, order block or a bearish order block. So if you this, what I'm trying to tell you is that on a higher time frame, you would have saw that price had to go down. So when you marked up this bearish mitigation block, you would have been like, okay, well, when price breaks it, I'm gonna be looking for price to come back to it, not break it. And so you shouldn't have took any sales until price came back up into this mitigation block and then went lower. And that's how the profit would have came. And if you look at the low down here, we don't have this marked up, but that low right there is probably, like I said, when you see the replay, you see what I'm talking about. That low right there is probably a bullish order block that price hit before it reversed back up into a bearish mitigation block. It's like tennis. It's like tennis. It's literally hitting the ball back to bullish order block. The bullish order block is hitting the ball back to a bearish breaker or a bearish mitigation block, and then it's hitting the ball back down to a bullish order block or a bullish breaker.
I see.
I mean, that's all this shit is. It's like tennis. Like I seen one guy chart. He literally had like the tennis rackets on these areas. He didn't understand ICT, which is a shame. But I just be getting cocky about this shit because I really get it now. So, but you see how this works, man. Like this is some real shit right here. No indicators. We marked up the last down close candle and price still respected. Crazy. Crazy as cat shit, actually. So let's go ahead and mark up the next one. Then I'll show you the red box, blue box, green box, which I may actually take off of YouTube because it's too powerful. So, so where's the next bearish mitigation block at? Where would you say is that?
Let's see. Boss.
Okay, what's going on? Hold on quick. I can't even move my.
Seen it.
I can't move my goddamn screen. Hold on quick. Okay. So where would you say it's at? Now remember, price is just imagine that everything to the right is not there yet. So you just marked up a bearish mitigation block. So where would you say the next one is? Yeah, you got to drag it. Yeah, exactly to the right so we can see the candles.
Next one is going to be this guy.
Yeah, so go ahead and go ahead and clone that. Go ahead and clone that box. Go ahead and clone the bearish mitigation block. And put it on that one and then drag it to the right and see what you see. Yeah, put it on the high and the low. Remember, we have nothing but a black screen to the right. So all you see right now, hold on, wait. Give me a vertical line real quick and show me exactly where. Give me a vertical line because I don't want you to. I want people to see like I'm just trying to imagine like a black screen. So just give me a vertical line, and I'll show you where to put it.
Okay.
Okay, so where is price right now Remember, everything to the right is a black screen. So where do you see price right now after you just put a vertical line right there.
Right here.
Yeah, just put it right there. Okay, so
Okay.
what I'm trying to ask you is where would you what bearish mitigation block? Go to the right one candle at a time. Tell me where you're gonna stop where you're going to see the chart and say, oh, there's a bearish mitigation block. I need to mark it up. What candle? Where would price have to be for you to say, oh, there's a bearish mitigation block? I need to mark it up. Keep going to the right. Tell me where you're going to stop.
I'll stop somewhere. Yeah.
Exactly. One of the
On that
two,
low.
either that candle or the next one. Exactly. Because remember, the bearish mitigation block is the last down close candle before you see an impulse.
Yeah.
Exactly. You would either that one or the one after that. You would say, "Oh shit, there's a bearish mitigation block. I need to mark it up." Not saying that price is going to come back up into it, but if it does, then I have the proper one marked up. So go ahead and put it on the exact high and exact low because you don't have it marked up properly. You don't have the bearish mitigation block marked up properly. Yeah. To the next candle. Now what are you doing? You wait a whole 4 hours. So when you see
No.
price is starting to reverse now. So now what?
they are definitely going for a shot.
Okay.
But
Okay. Keep going to the left. Now remember, we on a 4 hour chart, so of course you would enter on like the 1 hour or the 15, where
yeah,
you probably would have really seen on the 15-minute chart. You probably would have seen the displacement candle, which showed you that price would have. So what I would have did in this situation, I would have went short because I know on the 15-minute chart we would have seen like a this. Where did it take it at? Because remember, the wicks don't mean that it took it. The wicks is for the idiots out there. We look at the institutional market structure, which is the candle closes. That's what we look at. The way the candle closed, not the goddamn wicks. That's for the idiots out there. So the ICT people, we look at the candle close. So where did price take the last mitigation block that you drew up? Where did price take it?
yeah.
Okay.
So
So remember,
yeah,
I told you if price takes that zone, you got to be like, okay, well, I'm not going to go long yet. Exactly. Exactly. So let's go ahead and scale back out and let's go back to the top. So I'm about to show you the red box of blue. Man, where is it? Click on icons. See where it says emojis at the bottom? Click on icons. It says stickers, emojis, icons. Boom, boom. Now go ahead and find that circle right there. See the circle? It's a solid circle. Solid circle, solid circle, solid circle. That's not solid right there. Click on that. Now go ahead and click anywhere on the chart. Go ahead and make the box a lot smaller. Scale it in. Click on the boxes, not the circles. Click on the boxes. Click on the boxes. You got to scale it in. Click on the boxes. You're clicking on the circle. Click on the boxes. You're clicking on the circle. Click on the boxes. Click on the boxes to the left. Click on the boxes and scale it in. Yeah. Scale it in a little bit more.